All right, today we're going to tackle a system that builds fortunes and really shapes our entire world, the stock market. And to really get how it works, you've got to go way back. I'm talking back to the 1600s, where this brilliant idea got cooked up to solve a very, very expensive problem.
So picture this. We're not in some stuffy boardroom. We're on the high seas back in the 1600s, and we're talking about the legendary Dutch East India Company. Now, this wasn't just a business, okay? This was basically a global empire. We're talking hundreds of ships crisscrossing the globe, charting the known world.
I mean, can you even imagine the sheer value packed into those ships? We're talking gold, exotic spices, luxurious silks, all from these far-flung lands. This company was literally the engine of global trade. But here's the thing, every single voyage was a huge, massive, and super costly gamble.
And that's the big problem, right? These voyages were unbelievably risky and cost an absolute fortune to fund. So the question was, how on earth could they afford to keep doing it?
Well, their solution was, honestly, it was revolutionary. They had this idea, what if they invited regular people, private citizens, to help fund a voyage? And in return, those citizens would get a piece of the profits. They called it a share. It was brilliant. This spread out the risk, and it meant they could fund even bigger trips, which, of course, led to bigger rewards for everyone. And get this, they were selling these shares in coffee houses down at the shipping ports. And in doing so, probably without even realizing the scale of what they were doing, the Dutch East India Company had just invented the world's very first stock market. Just like that. Okay, so let's fast forward to today. The core idea? It's pretty much the same. But the process has definitely gotten a little more formal. Let's use a modern example. Say you've got a cool new coffee company, and you want to take it from a private idea to a public company. So how does our coffee shop actually go public? Well, first they've got to pitch their idea to big investors to get some serious backing. If that goes well, it's time for the main event, the launch of an initial public offering, or what you've probably heard of as an IPO. And boom, just like that, the company is officially on the public market.
That IPO, the initial public offering, is a huge moment. It's the very first time a company offers its stock, its shares, for sale to the general public. This is the moment it officially transforms from a private business into a publicly owned one, where anyone can invest. And this is a really crucial point. When you buy a stock, you're not just buying, a digital certificate. You are literally buying a small piece of the actual business. You become a partial owner. And your investment, it directly helps that company grow, fund new ideas, and hopefully become way more successful. Okay, so you own a stock now. But why does its price go up and down all the time? Kind of like a seesaw. Well, it all boils down to one of the most basic fundamental ideas in all of economics, supply and demand. The dynamic is actually pretty simple. Let's look at the upside of the seesaw. If a company is doing really well, more people see that potential and they want to buy its stock, right? That increased demand pushes the price up. But on the flip side, if the company starts to look less profitable, investors get nervous and they start to sell. Demand drops and, you guessed it, the price goes down. It's this really powerful feedback loop. Success breeds confidence. So as the company gets bigger and more profitable, even more buyers see that potential. And they all rush to buy in, which of course drives the price up even more. It's great news for everyone who already owns a piece. But of course, the reverse is just as powerful. If investors start to get worried, maybe there's some bad publicity, or they just get a feeling the company's best days are over, they'll start selling off their stocks to lock in their gains before the price drops. And that flood of selling is what tanks the demand and pushes the price down. So what actually causes these big swings in confidence? I mean, it's not just about the company's profit reports. That price seesaw is constantly being pushed and pulled by a ton of different real-world factors. Yeah, a whole range of things can tip the scales. It could be a change in leadership, like a new CEO, or maybe some bad publicity, even stuff like new laws and trade policies, the fluctuating price of materials, new production technology, or shifting labor costs. All of it can shift investor confidence and create that volatility we see every day. This quote really captures the absolute heart of the market. At the end of the day, it's not just about numbers on a screen. It's driven by a very powerful and very unpredictable human emotion, confidence. That collective belief has the power to fuel massive economic booms or trigger devastating financial crises. And that fundamental unpredictability, that's exactly why most experts will tell you to be wary of trying to make a quick buck in the market. The much more proven strategy is reliable, long-term investing. You know, it's like planting a seed in a really solid company and just giving it time to grow. For centuries, investing was really a world reserved for the rich and powerful. It just wasn't accessible to most people. But then, in the modern era, a technological revolution came along and just completely broke down those walls. And what was that revolution? The internet, of course. It completely democratized the stock market. All of a sudden, everyday investors like you and me could get access to the exact same tools and markets that were once reserved for those big-time Wall Street investors. The game had totally, completely changed. And this is why all of this really matters to you. Because now, with a little bit of education, pretty much anyone can trade stocks online. You can support the businesses you genuinely believe in, and you can use this incredibly powerful system to go after your own financial goals. The barrier to entry has never, ever been lower. So, there you have it. That's the stock market. It's a journey from a shared risk on a dock way back in the 1600s, all the way to a global digital network in your pocket. The system is more accessible than it's ever been before, which really just leaves one powerful question. Now that you know how it works, what kind of idea would you invest in?